So here is NILE BitNile. This finishes at 60.76 cents today. That is down 14.06%.
And it's gone.
Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is ATER Aterian. This finishes at $5.85 today. That is down 10.69%. So we've been covering this stock for a couple weeks now. It's definitely been short squeezing. I said yesterday, it's probably going to pull back sooner or later. Looks like the squeeze was winding down. A lot of apes didn't like that. Got a good amount of hate. But you know, I keep it 100 here with you guys. I tell the truth. And yeah, it's down almost 11% today. So this was number 1 on StockTwits today. Once again, had over 10,000 mentions. So once again, we're going to analyze it. So really no company-specific news to justify this price action today. It just seems like, again, the squeeze winding down. More shorts coming in here. And people pulling their money out. People taking profits. Just speculation on my part, though. All right, let's go ahead and analyze here. So first of all, this appears to be a cup and handle in the making. Bottom of the cup being 210, and there can be multiple possible tops. It can be 680, and if it is 680, that would be a bearish indicator, because that would mean the cup has already topped out and is due for a pullback to form the handle. But it can also be above 680, and anything above 680 would be a bullish indicator, because that would mean the cup is not completed yet. It can also be 835, 995, 1190, 1420, 1705, 1905, and in the longer term, the cup and handle is even bigger, and this can potentially go back up to 49 in the long term. So the cup and handle can be bullish or bearish depending on where the top is. So I think the most realistic top would be 680 or 835. It appears like in the long term, it's a bullish indicator. In the short term, pretty hard to tell, but it does look like 680 may be the top. The stock appears like it's having a pretty hard time breaking 680. So in the short term, it looks more bearish than bullish in my opinion. We do have a gap down at 850, so that is a bullish indicator that is telling us that the stock should eventually come back up to 850 to fill this gap. May take a while, but eventually it should. And this looks like a potential bull flag in the making. No confirmation just yet, but it looks like a flag pole is forming. So all we would need is some pullback to form the flag to get confirmation. And the bull flag is a bullish indicator that would suggest that the stock may want to break out to the upside. In the aftermarket here, this is running to the upside up to 595. So if this holds, that would be a bullish indicator for tomorrow. That is suggesting that tomorrow the stock will run to the upside. And we do have a gap up at 390. So that is a bearish indicator. That is telling us that the stock should come back down to 390 eventually to fill this gap. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is trading between the sideways channel, the rectangle of 610 and 565. So if this goes to the upside, next levels of resistance would be 610, 640, 680, 745, $8, 835, 865, 910, 955, 995, and then 1045. There is resistance above 1045, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 565, 510, 460, 410, 355, 305, 255, 210, and then the low of 140. So right now, at this current price, 585, the channels to the upside and the downside are pretty wide. So expect significant price action either way this goes. RSI is currently at 68, so this is no longer in overbought, overvalued territory, but still pretty high up there. Still pretty much overbought and overvalued. So be careful, guys. So according to the RSI, the current price of 585 should be lower. And this did 97 million in volume today. Very significant volume, way above the average of 8.5 million. So the sell-off today was confirmed by the volume. And the volume continues to drop, so it does appear like the squeeze is winding down and coming to an end. Okay, guys, just my opinion, not financial advice. So long term, this looks like a good stock to buy and hold. Got some pretty strong bullish indicators in the cup and handle and gap down. In the short term, this may have more upside potential, but really shouldn't go up too much higher. This seems a bit overextended to me. And again, the volume would suggest that the squeeze is winding down and coming to an end. So therefore, if you want to go long, not financial advice. Personally, I would not do that. I think it's a bit too late to go long here at the current price. The stock went up over 200% from the low of 210. So I think going long here would be FOMO. I think you missed a chance already. That being said, there is still more upside potential. I think if it breaks 680, this could potentially go back up to 835. That's where the next top of the cup is. So I would say going long here would be a high risk, high reward play. Pretty much a gamble at this point. So from this current price, 585 up to the next potential top of the cup, 835. That would be over a 40% upside. And to the downside, this has the potential to go back down to 390 where the gap is. And that would be about a 35% downside. A lot of upside potential and a lot of downside potential at the same time. High risk, high reward. So if you want to, go for it. Just understand that it is very risky and you can get burned. Now, if you're in this for the long term, I would say hold off for right now. This is definitely due for a pullback. Can't keep squeezing forever. Again, I do think it will pull back to 390 to fill the gap. So if you're in it for the long term, I would hold off for right now and set your buy orders to 390. And I think that'd be a really excellent entry. And if it pulls back below 390, then you can just average down at the supports that I mentioned before. And also, based on this cup and handle here, if the top is 680 and the bottom is 210, this should pull back to around 445 to form the handle, because that's halfway between the top and bottom of the cup. So this should pull back, in my opinion, in the 445 to 390 range. Now, if you want to go short, not financial advice, seems like a pretty decent play. Again, I do think this will pull back to the 445 to 390 range. So that would be around a 35% downside. A lot of downside potential. A lot of money to be made here on the downside. We got some pretty bearish indicators in the short term in the gap up, cup and handle, high RSI, and high volume. So I would say as long as you're able to withstand some upside pressure here, eventually this should pull back around 390. So it is still risky. I would say going short here is also a high risk, high reward play. Again, because there is still upside potential. But yeah, as long as you're able to withstand about 40% upside pressure here, sooner or later this should pull back and you should be able to make 35% at least on the downside. So it's definitely not the greatest short play, but it is pretty decent. So if you want to go short here, I can support it. Just please do that at your own risk. And I would say cover at 390 where the gap is for a 35% downside gain. But quite honestly, there are better short plays out there in the market. You can make a lot of money here, but it is risky. So if you don't have the risk tolerance for this type of play, then I would say just move on. Just look elsewhere in the market. But yeah, guys, in summary, long term looks like a good stock to buy and hold. Short term, this may have more upside potential, but can't keep going up forever. The squeeze has to come to an end at some point. So if you want to go long for a quick scalp, there is a lot of potential money to be made on the upside, but please do that at your own risk. If you're in it for the long term, I would hold off, wait for a pullback. And if you want to go short, there is a lot of potential money to be made here on the downside, but still upside potential. So be careful. And please also do that at your own risk. So sorry to everyone who lost money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is ATER Aterian. So here is MULN Mullen Automotive. This finishes at $1.69 today. Nice. That is down 8.15%. Good. So we've been covering this stock for almost 2 months now. Crazy stock. It squeezed, and then the Hindenburg short report came out. Now it's pulling back, and still a resale favorite. I believe this was number 3 on StockTwits today. Over 6,000 mentions. So once again, we're going to analyze it. So we did discuss the stock yesterday. I did say it was probably going to keep pulling back, and today it's down another 8%. So no company-specific news to justify this price action today. It just seems like more shorts coming in here, especially after the Hindenburg report dropped. People pulling their money, taking their profits, and cutting their losses. And I would really like to see a response from the CEO to the Hindenburg report. It is very suspicious to me. That is a red flag that there is no response yet. You know, if you're accused of doing all these things wrong, you should probably defend yourself, right? But it's just radio silence, so just a red flag to me. But let's go ahead and analyze here. So first of all, we have a cup and handle. Bottom of the cup being 52 cents, the low. And there can be multiple possible tops. It can be 380. And if it is 380, that would be a bearish indicator, because that means the cup already topped out and is due for a pullback, which it already is pulling back. But it can also be above 380. And anything above 380 would be a bullish indicator, because that would mean the cup is not completed yet. It can also be 585, 640, 740, 815, 905, 980, 1050, 1165, or even 1590. Although I do think the most realistic top would be 380. I think it already topped out. So the cup and handle can be bullish or bearish depending on where the top is. But it appears like in the longer term, it's a bullish indicator, and in the shorter term, it's a bearish indicator. So we do have a double gap down. First gap down at 1190. So that is a bullish indicator. That is telling us that the stock should eventually come back up to 1190 to fill this gap. May take a while, but eventually it should. And then we have another gap down at 465. So that's another bullish indicator that is telling us that the stock should eventually come back up to 465 to fill this gap. Again, may take a while, but eventually it should. And then for the bearish stuff now, so we do have a double gap up. First gap up at 60 cents. So that is a bearish indicator. That is telling us that the stock may come back down to 60 cents to fill this gap. Looks pretty unlikely at this point, but possible, so be aware of that, guys. And then we do have another gap up at 150. So that is another bearish indicator. That is telling us that the stock should eventually come back down to 150 to fill this gap. We also had another gap up at 180, but that gap did fill yesterday. We do have this symmetrical triangle. It looked like it was consolidating around 240, and it was either going to break out to the upside or break out to the downside. And unfortunately, it looks like it's breaking out to the downside right now. So that's another bearish indicator. And in the aftermarket here, this is pulling back down to 165. So if this holds, that is a bearish indicator that is suggesting that tomorrow the stock will sell off as well. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is sitting on the support of 170, which I finished at today. So if this goes to the upside, next levels of resistance would be 190, 225, 255, 270, 290, 320, 340, 360, 380, $4, 410, and then 425. There is resistance above 425, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 155, 135, 115, $1, 75 cents, 60 cents, and then 52 cents. So right now at this current price, 170, the channels to the upside and the downside are pretty decently sized, so expect a regular amount of price action either way this goes. However, if/when this breaks 190 to the upside, the channels start to open up and get pretty wide, so expect a significant increase in price action if/when this breaks 190. RSI is currently at 38, so that is on the lower end, not quite oversold and undervalued just yet, but according to the RSI, the current price of 169 should be a little bit higher. And this did 70 million in volume today, way above the average of 22.5 million. So the sell-off today was confirmed by the volume. Okay guys, just my opinion, not financial advice. And what I'm going to say here is just based on the technicals. Fundamentally, I really don't like the stock. Like I said, the Hindenburg report really concerns me. We need to see some answers from the CEO. So personally, I wouldn't touch the stock just based on the fundamentals. There are some pretty serious accusations from Hindenburg on this company here. But technically, long term, it does look like a good stock to buy and hold. Got some pretty strong bullish indicators in the cup and handle and double gap down. But in the short term, it appears like it's currently a falling knife. Got some pretty bearish indicators in the double gap up and breakout to the downside of the symmetrical triangle. So therefore, if you want to go long, not financial advice, honestly, 169 is not a bad entry. Like I said, according to the RSI, 169 is lower than where it should be. That being said, I do still think there is more downside potential to go. Still looks pretty bearish to me. So if you want to enter at 169, go ahead. Like I said, not a bad entry, but personally, I would try to get this back at 150 because I think that gap will fill at 150. And it may possibly even go to 60 cents to fill the other gap. So personally, I would set the buy orders to 150, and if it pulls back down to 60 cents, I would average down. But yeah, 170 not a bad entry. If you want to go long here, sure. But personally, I like the entry of 150 and lower. And if it pulls back below 150, then you can just average down at the supports that I mentioned before. Now, if you want to go short, not financial advice, seems like a pretty decent play. Nothing too exciting. Again, I do think this will pull back down to 150 at least. So that would be over a 10% downside. And I really don't think it's too risky at this point. I really don't see this moving to the upside anytime soon. Momentum is cooling off here. This didn't have the hype around it like it did before. So I would say going short here would be a low risk, low reward play. Seems like a relatively easy 10% at least. So while it's not the most exciting play, not the most money in the world, it should be a relatively easy 10% short here. So I would support going short at 169 and higher, and I would cover around 150 where the gap is. It may even go down to 60 cents, but I'd cover at 150. So pretty straightforward here, guys. Fundamentally, I don't think this is a great stock. A lot of red flags, but technically, in the long term, looks like a good buy and hold. In the short term, if you want to go long, I would hold off. Looks like it's going to keep pulling back a little bit more. And if you want to go short, there is still a little bit of money to be made here on the downside. Not much, but seems relatively safe. So sorry to everyone who lost money in the stock today. And good luck to everyone currently in the stock and to everyone looking to take a position. This is MULN Mullen Automotive. So here is NILE BitNile. This finishes at 60.76 cents today. That is down 14.06%.
And it's gone.
So we talked about the stock yesterday. It mooned on good financials. They had good year-over-year sales. I did predict that this could come back down to 57 cents, and it appears like that's where it's headed. So this was top 10 on StockTwits today. I believe it had around 5,000 mentions. So once again, we're going to analyze it. So really no company-specific news to justify this price action today. It just seems like people taking profits and shorts coming in here. Okay, so let's go ahead and analyze here. So first of all, this appears to be a cup and handle in the making. Bottom of the cup being 50 cents, the low. And there are multiple possible tops. It can be 106, 115, 141, 174, 186, 218, 232, 251, 256, 296, or even 370. So those are all bullish indicators. That is telling us that the stock should eventually run back up to one of those tops to complete the cup. Although I do think the most realistic top would be 106. We do have this gap down at 75 cents. So that is a bullish indicator. That is telling us that the stock should eventually come back up to 75 cents to fill this gap. And then we do have a gap up at 57 cents. So that is a bearish indicator that is telling us that the stock should eventually come back down to 57 cents to fill that gap. And in the aftermarket here, this is running down to 58.6 cents. So if this holds, that would be a bearish indicator that is telling us that tomorrow the stock should sell off. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is trading between the sideways channel, the rectangle of 62 cents and 60 cents. So if this goes to the upside, next levels of resistance would be 62 cents, 68 cents, 72 cents, 77 cents, 83 cents, 88 cents, 92 cents, 94 cents, 98 cents, 103, 106, and then 111. There is resistance above 111, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 60 cents, 58 cents, 56 cents, 53 cents, and then the low of 50 cents. So right now at this current price, 61 cents, the channels to the upside and the downside are pretty decently sized. So expect a regular amount of price action either way this goes. However, if/when this breaks 62 cents to the upside, the channel starts to open up and get pretty wide. So expect a significant increase in price action if/when this breaks 62 cents. And to the downside, if/when this breaks 56 cents, the channel starts to open up and get pretty wide. So expect a significant increase in price action if/when this breaks 56 cents to the downside. RSI is currently at 44. So according to the RSI, the current price of 61 cents should be a little bit higher. And this did 52 million in volume today. Very significant volume, way above the average of 10 million. So this sell-off today was confirmed by the volume. Okay, guys, just my opinion, not financial advice. So long term, this looks like a good stock to buy and hold. Got a pretty strong bullish indicator in the cup and handle. Short term, I do think this has a bit more downside to go. But you know, the all-time low is 50 cents, and it's currently at 61, so it really shouldn't go too much lower. So therefore, if you want to go long, not financial advice, honestly, 61 cents is already a pretty good entry, below average RSI, and again, all-time low is 50, so really can't go too wrong buying in at 61. That being said, I do think this will keep pulling back to fill the gap at 57 cents. So if you want to go long at 61, then go ahead. Really not a bad entry at all, but if you want an even better price, this should pull back down to 57. So that's where I would set my buy orders. So I would support going long at 57 cents and lower, and if it pulls back below 57, then you can just average down at the supports that I mentioned before. Now, if you want to go short, not financial advice, I don't really see a point in doing that. Again, this should pull back a little bit more to 57 to fill the gap, but from the current price of 61, that's only about a 5% downside, and there is a good amount of upside potential here. Again, this should eventually come back up to 75 cents to fill that gap, and 105 to complete the cup. So I would say going short here would be a medium risk, low reward play. Just not really worth it in my opinion. You should have went short yesterday before this went down 14%. So honestly, you should be able to make an easy 5% on the downside here, but you never know. This is a retail favorite. This theoretically can go mooning at any time, and if this does go back up to 75, that's a 25% upside, and if it goes back to 105, that would be about a 75% upside. So 5% downside potential, 25 to 75% upside potential. So not really a great idea to go short here. I think you missed your chance. You should be able to make 5%, but honestly, not really even worth it in my opinion. Not really even worth the risk. So if you want to go short, go ahead. I would say cover at 57 where the gap is. But honestly, I think you just stay away from this in case anything crazy happens. Alright, so pretty straightforward, guys. Long term looks bullish. In the short term, I think it has a bit more pullback to go, but really can't go too much lower, and there's a lot of upside potential. So if you want to go long, 61, not a bad price, but it should come back down to 57. And if you want to go short, I don't really see a point in doing that. I think the risk outweighs the reward. So sorry to everyone who lost money in the stock today. And good luck to everyone currently in the stock and to everyone looking to take a position. This is NILE BitNile. Thanks everyone for watching today. I appreciate you guys. Please like the video. Please subscribe. And catch me every weekday after market close on the Smarter Gambling Show. You apes already know. Diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.